Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Tuesday afternoon, we have Shawn, Cruz, Manager of Trader Services at TD Ameritrade, to discuss Nasdaq-100 performance and trends in the Nasdaq Volatility Index, or what we call VOLQ. And while volatility has come in, it doesn't mean that stocks and commodities are necessarily predisposed to what's happening in the headlines, Shawn, as we've seen over the past number of weeks. So let's start with Nasdaq 100 levels that you're watching, volatility changes, and trends that you're seeing in VOLQ.
Yeah, I mean, I think if you look at where we're at right now for the NASDAQ, we've made a pretty nice recovery here. And now we're sitting just below what is, to me, a pretty significant technical support level. And it's not very often you see a nice, clean level here going back almost for the past year. But this had been previous resistance last year. Then we broke through it and it actually became pretty reliable support. And then we broke down below that again on a lot of the concerns that have been surfacing in the past weeks and months. And now we're right back to that resistance level on the upside. And I think if you take a look at how we got here this week, it seems a little bit encouraging in that we didn't just gap higher or anything. If you look intraday, there was some choppiness. Some days were more volatile than others. We've sort of been stair-stepping our way up to these levels over the past 5 days, which I think is the sort of recovery that you want to see, because those typically end up having a little bit more sustainability to them. And so now I think consolidation here around these price levels might actually be good if we can just show that we can maintain these levels. That might be what it takes to get more investors coming in and actually buying this market, which can be what finally pushes us higher. And if you're looking for confirmation on that, VOLQ has certainly been moving significantly lower. I think we're sitting at a little bit of a floor that we'll want to see us break through. To me, that would be indicative that there is a significant change in sentiment from investors, and you should probably expect newer highs. So certainly watching VOLQ to be the confirmation of any sort of a breakout we can make from where we're at right now.
And Shawn, if we take a look at what's happening in the commodity space, particularly with crude, again, we can see where those movements have really taken place and just how predisposed the market is to headlines.
I think so. And I think when you look back at any commodity chart, you can look back at almost any equity chart as well. At one point, it just looked like the market kept waiting for things to stop, the headlines to stop getting worse than they were the day before. And it looks like we're getting there where you're actually starting to at least see some creep in the headlines around negotiations. They're becoming more and more frequent. We haven't had anything, I'd say, fruitful out of any of those. But I think it does show that maybe we're getting to a point where neither side is really making any massive gains or losses one way or another. It's sort of becoming a little bit more of a stalemate here. And I think when you start seeing that, that will be what brings people to the negotiating table. So I think it's really just things are not getting worse and worse and worse, which for a while there, every day you were asking yourself, and when are we going to maybe hit an inflection point where things stabilize and we can get some talks going? I think we're getting into that stage. And you're seeing a lot of the equity indices and the commodity prices reflect that. So just stability, and I use crude oil, but you could look at some of the others coming down off of those highs, some stability even at higher levels, just some stability out of those prices might be what gives investors maybe a little bit more confidence in the inflation outlook in particular, which has certainly bleed its way over into the interest rate complex and can sort of be what drives some of the volatility that follows on in equities as well.
Right. And Shawn, to wrap up here, let's take a look at the Fed funds rate. It seems as if we're coming to consensus about this 50 basis point move as well.
It is. And I think it's important when you look at these charts right now, it doesn't show the probability of a move in terms of base points. It shows the probability of being in a target range from the Fed. So right now we're in a 25 to 50 basis point range. What this is showing you is the probability that the Fed at their next meeting is going to say we are going to be targeting 50 to 75, or we're going to be targeting 75 to 100. So seeing what the Fed is looking at targeting right now, that 70% probability that they're going to be targeting 75 to 100, which would be a 50 basis point increase in that target Fed funds rate. And if you want to see how fast things can change due to the global situation, be it geopolitical risk, inflation concerns, what's going on with commodity prices. Over the past month, we've gone from a very low likelihood of seeing 50 basis points at this May meeting to now it seems the market is pretty much all in agreement that that is going to be the base case, that we're going to get a 50 basis point hike. But I think you're going to want to continue to monitor this throughout April, because one thing you can see right just from this chart, that can change very quickly what the market is expecting as the situation, be it on the geopolitical headline front or just in the commodity price front, changes as well.
All right, Shawn, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.